Richard Wolff from Democracy at Work with another EconoMinute. I want to talk once again about the tragedy of Greece, to get the lessons for all of us that lie in that unfolding tragedy. Let's go over it briefly. Over the last 30 to 40 years, before the great crash of 2008, Greece did what many other countries did. It borrowed an enormous amount of money. In the case of Greece, it was the government there that did this. There was a cozy relationship between the Greek governments, left and right, and lenders, Greek banks, French and German banks, American and British banks. They all had a good time. The bankers lent and the politicians borrowed. It was money, money, money for the lenders, and it was good politics for the borrowers, the Greek government. And why? Because when governments borrow, they're able to solve their basic economic problem, which is how to provide jobs and services for their people without taxing their businesses, their rich people, and their average people too. And what politicians love in this crazy capitalist system is to be able to give business and the rich and the masses some at least of what they want and not tax them, which they don't want either. And the way you do that is to borrow. So the politicians need to borrow for their political careers, and the bankers need to lend to make money. A marriage made in heaven or that other place, depending on your perspective. And boy, the Greek government borrowed to beat the band. No way alone, many others did it too, but the Greeks borrowed. When the crash came in 2008, this nice game fell apart. Greece is a small and relatively poor country. It was savaged by the crisis. It didn't cause the crisis. It didn't want the crisis. But when the crisis came, they could not pay back the European and Greek and other bank lenders who had been funding the government's borrowing program. That frightened the banks. They might not get paid. So they did a very clever thing. They went to the European Union, the European Central Bank, the big central institutions of Europe, and they said, we have a clever idea. You don't dare bail us out. We're not going to get paid from the Greeks who have no money, but you can do it for us indirectly. It won't cost you any political capital. Here's what you do. You lend to the Greek government, and you say you're helping the Greek people. You require the Greek government to use the money given to them by the European institutions to pay back the private banks, Greek, French, German, British, and so on. It all sounds like we're helping Greece, which of course we're not, because the money that goes to Greece immediately leaves Greece to pay off all those political debts rung up. That's what happened. That's why the big bailouts of Greece since 2012 have in fact not helped Greece. That's why the tragedy continues. The money was never used to fix the Greek economy, to help the Greek people. It was actually a program to help the very banks that brought on the crisis. Does that offend you? Good. Then I'm being clear. So where is the situation now? The Greeks now need some money actually that they can use to get out of their dilemma. And the Germans and the French don't want to do it right now. They don't want to let the Greeks go. They don't actually want to help the Greeks. It was all fake before. It was basically helping their own banks. So now they're holding back, and the prognosis for Greece is awful. The IMF recently released a report saying in the current situation, if the Greeks don't get massive debt relief, which the Europeans are not about to give them, they will be an impoverished country for decades to come. Capitalism reveals its deeper self in how it treats the Detroits, the Camden, New Jerseys, the Puerto Ricos, and the Greeks in this world. Beware, dear listeners and viewers. What is happening now in Greece and elsewhere is a signal and a sign of what's in store for us unless an out-of-control capitalist system is fundamentally changed. This is Richard Wolff from Democracy at Work with another EconoMinute. Thank you.